You use money every single day, but here's the strange part. Almost nobody ever explains how it actually works. If you understand the next 8 minutes, you'll probably never look at money the same way again. Most people think money is the goal. It isn't. Money is the scoreboard. Ownership is the game. Imagine Britain as one giant monopoly board. Every month, that board produces rent, dividends, and profits. The question isn't whether money exists, it's whether you own any of the squares. UK finance stat, practical UK personal finance, mild exasperation, and occasional bad jokes. Before we start, this isn't personal financial advice. If it was, I'd be charging considerably more than YouTube currently pays. Today, we're opening the bonnet on how money actually works. Inflation, banks, debt, investing, housing. By the end, you'll understand why some people always seem to get ahead while others run faster every year but never catch up. Let's begin with the biggest misunderstanding of all. Money isn't wealth. If everyone woke up tomorrow with twice as much money, would Britain suddenly become twice as rich? Of course not. We'd still have exactly the same number of houses, builders, supermarkets, and plumbers. Wealth is the stuff money can buy. Money is simply the tickets we use to compete for a limited amount of wealth. If everyone became millionaires overnight, Greggs wouldn't become cheaper. It would simply discover the world's first 27-pound sausage roll. Finance dad rule. Money is a claim on wealth. It isn't wealth itself. So if money isn't wealth, why does it quietly buy less every year? Welcome to inflation, the invisible pay cut almost nobody notices happening. Inflation quietly reduces what your money can buy over time. That's why you can have exactly the same bank balance but afford less with it. Imagine inflation like termites. They don't knock your house down overnight. They quietly nibble away until one day you realize something important has disappeared. If your savings earn less than inflation, your purchasing power is quietly moving backwards, even if the number in your account never changes. Your bank proudly tells you that you've still got £100. Unfortunately, your supermarket trolley politely disagrees. Finance dad rule. Cash protects today. Productive assets help protect tomorrow. So if inflation keeps reducing purchasing power, where does all the money actually come from? Most people imagine banks simply lend out someone else's savings. Modern banking is much more interesting than that. When commercial banks make loans, they also create new bank deposits. As loans are repaid, those deposits are gradually removed from the system. The real system is more complicated, but this is one of its core ideas. Think of banks as the plumbing of the economy. Money constantly flows through pipes connecting households, businesses, and governments. Your mortgage probably created more new money than every birthday card you've ever received. Finance dad rule. Debt isn't automatically good or bad. Judge it by what it builds. If banks can create money, why doesn't everyone become richer? Here's where the game changes. Income pays for today. Ownership pays you tomorrow. Most people spend their lives trying to earn more. Very few spend enough time trying to own more. That's one of the biggest differences between income and wealth. Your salary is brilliant at paying today's bills. Productive assets are brilliant at paying tomorrow's bills. Eventually, they can start buying more assets for you. Over long periods, productive assets have often increased in value faster than wages. That's one reason owners frequently become wealthier without working proportionally harder. If your salary is a bicycle, assets are the little electric motor that quietly helps you up the hill. Finance dad rule. Income creates opportunity. Ownership creates freedom. So if ownership matters so much, why do house prices keep rising? Houses don't usually become more expensive simply because bricks became more valuable. Something else is happening underneath. When buyers can borrow more money, they can usually bid more for the same limited number of homes. That's one reason credit has such a powerful influence on prices. Imagine 10 people chasing one house. Now imagine all 10 suddenly being allowed to borrow twice as much. The house hasn't changed, the bidding has. It turns out building fewer houses than people need isn't a brilliant long-term affordability strategy. Finance Dad Rule. House prices follow monthly payments more closely than headline prices. We've reached the final piece of the puzzle, and it's the reason wealth eventually starts accelerating. Compounding is often described as earning interest on interest. That's true, but it doesn't really explain why it feels almost magical. Here's the strange thing. Compounding starts off painfully slowly. Then, almost without warning, it begins doing most of the work for you. The first decade of investing often feels disappointing. The second feels encouraging. The third is where people begin calling you lucky. Time is the ingredient most people underestimate because it doesn't look like it's doing anything, until suddenly it looks like it's doing everything. Planting an oak tree isn't exciting on day one. 30 years later, everyone asks how you grew such a magnificent tree. Finance Dad Rule. Compounding rewards patience far more than brilliance. So what should an ordinary person actually do with all of this? Ignore the noise. Build an emergency fund. Own productive assets. Invest consistently. Give compounding time to work. The system isn't perfect, but understanding it lets you play it much more effectively. The people who quietly build wealth usually aren't chasing shortcuts. They're simply following the same boring process for much longer than everyone else. This week, ask yourself one question. Which part of the money machine am I improving? My income, my savings, my investing, or my ownership? Improve just one of them. Money isn't the destination, it's simply the tool. The real goal has always been owning enough productive assets that money starts working harder than you do. I've been UK Finance Dad, making sense of Britain's money madness. See you next time.